What's up, everybody? Michael Silva here. You're watching the Stock Market Brief Show. Market, wow, continues to be really volatile. A couple signal charts we're going to be going over today. I'm bringing back the praying bottom fisher. A couple other indicators. Going to go over the options expected move. Got a lot of different charts to go over in today's brief, but I'm going to try to go through them fairly quickly to keep this video as compact as possible. If you're new here, welcome to the channel. This is the Stock Market Brief Show. We use technical analysis, intermarket analysis to get a good idea as to where the market might be headed next. Let's get into it. Welcome back to the show, everybody. We're starting off here looking at the NYSE right down here, and then also another McClellan oscillator down here too as well. And the reason why I'm showing this is simply because when we get these readings together, the last 2 out of 3 times it did present more risk in the markets. What do I mean? Well, when the NYSE is down through the zero line, like here, and like there, but then it levels with the NYMOT, NYSE McClellan oscillator, and that gets a minus 300 reading, like right there, like right there, like right there, and like right now, minus 304. And when they get to those areas in close distance of one another, we have seen some pretty severe sell-offs in the market. For example, gave us a heads up of this further downside there. That was the pandemic crash. We had also in 2018, it showed us more downside here in the markets. We actually went through a lot of chop here. So it actually went low. Okay, the market went low. We bounced. We came back down. We bounced. We came back down. We bounced. And then we fell off even further. I can see that being something very similar to what happens here. And then the other time was here in earlier 2018 where we did already kind of had this blow off top type of look. And then it reverted down and pretty much tagged the bottom where we bounced up. Everything seemed fine. But then we went ahead and completely reversed that move to create a double bottom. And then we started to rally. That actually kind of matches what seasonality looks like as of right now. So, I wouldn't be too shocked to see a bounce and then something like that take place. But it's way too hard to predict in this environment. I just wanted to share that with you that, hey, risk is clearly here in the markets. We're noticing the expansion in volatility. It's a very difficult environment to swing trade or to play breakout trades because of the amount of volatility currently in the markets. Now, today's price action was quite interesting. It did represent a lot of risk off type. It represented a risk off type environment. What I mean by that is the dollar started breaking out higher, which forced commodities such as gold and silver lower. You can see also the S&P 500 as this has been on this pretty large rapid move to the upside. It's really been hurting the S&P 500. As you can see, there's pretty severe downside there as of recently. But more importantly is looking at the TLT over here. You saw a pretty big gap up and follow through type day. So a little bit of a flight to safety there, both in the TLT and also the dollar. Another thing that we're starting to notice is spreads hit. They started to flatten out pretty significantly more. We haven't seen this level of a reading really since way back here in December-ish of 2020. And we're back down at those levels ever since the press conference came out with the FOMC. Now, the reason why I'm showing you this is because, just take a look at the 30 and 5 right here. We're, heading closer and closer to inversion. We're at 0.43 and the 0.63 on the 10 and 2 spread right there. Interesting stuff. You can see that gold did take a pretty severe hit. I think that was mainly perpetuated because of the move in the dollar. So, it's still within this area of consolidation where it expanded and now it's contracting. So we're going to continue to keep an eye on that. I do have some positive hopes for gold, but we need to see the strength before really, feeling a little bit more confident in that. And then silver, huge hit to the downside, down 4.75%, along with, silver miners, gold miners, junior miners, etc. Back below that 50-day, back below the 200-day moving average, right? We try to recover it, but we started selling off there. PPO is starting to curl down too as well, but it's still holding that area of support. If we take a look at I already had the TLT. If we take a look at oil hit another high, or not an all-time high, but it did hit I think this is a 52-week high. Don't quote me on that, but I'm pretty positive that's a 52-week high. Still negative divergence is forming there, and we have somewhat of a shooting star type candle. So oil still continues to be just a lot of oil stocks, energy stocks, they're hitting the 52-week high list. I'm still keeping an eye on it for a potential short-term short position. USO mainly is the one that I'm focused on. We had that gap up and then it started selling off and then we bounced a little bit throughout the day. So I never got that confirmation yet as of now, but I'm going to keep an eye on it moving forward. To Friday, which is tomorrow, and then also into next week. Now, if we take a look at what took place today in the 11 sectors, another reason why it seemed like a risk-off type day is you saw utilities and consumer staples up there towards the top, along with energy. Energy has been just one of the stronger performers overall. Now, let's continue on. Let's look at the S&P 500. So what is the options market pricing in as far as risk goes tomorrow? Well, they're pricing in about a $7 range. Just the other day, right, for 2 days of trading, it priced in, I think it was like a $11 range or somewhere around there. So a lot of volatility. And we saw that today, right? Right out of the gates, we saw a gap up higher. All right. So it looked pretty good overall. And then we started to see it rally. At that point, I posted earlier in the morning on the Discord group saying, you gotta proceed with this move with caution, because we were bumping our head into the 200-day moving average and seeing this type of strength with this amount of volatility in the markets. Don't be shocked and don't be surprised if the SPY and the Qs start to roll over. Well, we went a little bit higher. Then I started to look at stocks like Microsoft. I started to look at stocks like Google, and they started kind of like topping out in a specific area, and noticed like a pretty strong area of resistance where, okay, well, if they don't break through this market, it's going to be very hard to continue a trend type day. Well, they never broke through. And then when they started rolling over, the rest of the market, the Qs and the SPY started to go down with it. Tesla reported on earnings. I don't have that chart, but holy moly, what a wild day in Tesla. I think it was down double digits, around 11% on the day. If we take a look at the 15-minute time frame, you can see here it also pulled into that declining 5-day moving average, keeps continuing to hold this support resistance, right there, and then we kind of consolidated here sideways. PMO, it looks like it wants to start curling over right here to potentially, maybe get some legs to the upside. We'll see. I can see that potentially happening because of a couple of the stocks that are reporting earnings, and they're doing so far so good after hours, and I'll bring up those charts momentarily. But let's go ahead and take a look at the VIX first. First and foremost, let's just look at the level that it's at. The VIX is still greater than 30, so this still remains in that area where obviously fear is a little bit high, volatility is high. This is not an environment where you feel comfortable, trying to tag bottoms right now. Okay, so volatility still remains elevated at these particular levels. So be very careful here. Now, if we take a look at Apple was pricing in an $8.22 move going into earnings. After hours is this purple kind of line right here, and you can see we're tagging the upper range of that right now. So I think that if we continue to hold these levels up here, that's probably gonna help the SPY and potentially other tech stocks too as well, which may overall perpetuate the market, such as the Qs and the SPY, to elevate tomorrow. But like I said, there's still quite a bit of volatility in the markets overall. So if this does start rolling itself over going into tomorrow, be cautious, because we can continue to see gap ups and people selling into those type moves. Another big one that's reporting on earnings is Visa. That was expecting about a $9 move going into earnings, and you can see after hours it's touching the upper range of that as of right now. All right, let's continue on to the Qs. Okay, so the Qs. This is interesting. So these black dashed lines, right? This is what the options market priced in as far as last week goes. And, about 70% of the time, the price ends up closing out in this area. And you can see right now, where are we? We're right there at the lower range. So, price isn't outside of it, it's the safe zone. Nothing too crazy is going on. Tomorrow it's pricing in around a $7.2 move, which means it can take us back up to around 350, and it could take us to around a low around 335. I think that if the options market that priced in the previous week is going to be correct, I think we're going to be remaining around this zone going into tomorrow. I think that maybe we can step outside of it. That's more than possible. But just keep in mind this. If we close right around this 350 marker, where does that put us for the week? I mean, we had 1, 2, 3, 4 trading days. We closed right here last week, right? That literally makes this week pretty much a boring week, right? There was a lot of volatility, but, where we opened, well, not exactly where we opened, but where we closed last week, we'd be closing right around that same exact area. So not much price movement overall. Pretty relative flat type of week if that's the case. Now, if we take a look at the 15-minute time frame, very similar to the SPY, still declining 5-day moving average. In order to buy this dip and to feel confident with it, we want to start seeing this flatten out to head. All right, the IWM crash territory. We are in a bear market. We have down from peak to trough 21.8%, closing below that minus 20% now. So this is official bear market territory in the small caps. If we take a look at what the options market pricing is going for tomorrow, $4 move. That's what's expected. You can see we're at the lower range here of what the options market priced in last week. So, if we start bouncing up from this area, which is likely as we're getting these overextended moves, just be mindful. Even a move up here, we're not, we're not out of the woods by any means. Like, it's normal to see these type of bounces. Look what is pretty crazy here. So what the options market priced in last week, we hit both the upper edge right here and we tagged the lower twice. So where are we going to end tomorrow? I don't know. Going into a Friday, though, me personally, I don't go too heavy on Fridays. I want to enjoy my weekend. So I'll see how price action is handling, maybe take a couple of trades. But as it stands right now, I still don't see that great of setups going into as far as like swing trades or breakout type trades go. Now, let's continue on to the 15-minute time frame. This one looks definitely weaker than the other indices. You can see the PMO is starting to curl itself over here. You have a little bit of a bottom here, a potential double bottom right now, but it's still a declining 5-day moving average. So in order to get a little bit more legs, you'd want to see this level get taken out, which is about 203 to 204. And like, just imagine if it goes straight up to there. Like, that means it's a very aggressive move to the upside, and typically that kind of stuff gets faded in the first place. So not looking too hot for small caps. Let's hop into the indicators. I'm going to look at some sentiment charts first. First and foremost, the bears, the bulls survey. Look at the bears getting a very strong reading. I'm actually pretty sure this is even deeper than what we saw during the pandemic lows right here. If not, it's pretty darn similar type reading. And, we haven't even begun to fall like something quite as dramatic as what happened during the pandemic. And as you can see right there, we're not even in a bear market and we're getting these crazy type readings. You can see the ratio is very low too. As far as sentiment goes, or asset managers, sorry, and the RIDEX, you can see the RIDEX bared up a little bit more too as well. We haven't got a reading like that for, since this dip, the low of that dip. And we got a 53.39 reading on the asset managers, still above 50. When this gets below 50, that's when I start to look for like, okay, okay, people are backing off here. Perhaps this is where we potentially catch a bottom, but just keep in mind, we've been severely lower, in below sub 40 here during that kind of pandemic. Now you can see here in 2018, where were we getting readings? We're getting readings also slightly below 42 as well during that period of time. Now, a couple of things that I want to call out here is this one hasn't updated yet. I use this as a buy and sell signal. It's January 26th. It'll be updated probably later tonight to early tomorrow. But the 10-period moving average continues to move higher and higher, which means risk is continuing to build as we've seen previously where it goes higher and higher. What do we need to look for? We need to see this thing start turning back around and then crossing down through that 0.95 for the buy signal. It worked out really well finding the Santa Claus rally. However, as it stands right now, it's still pointing pretty much vertical up. Now, a couple other charts to go over, the NAMO and the NIMO, just calling out they're still very overextended, getting a lower reading even further. And these can produce some wicked bounces, but like I also been stating, these can also, not only predict bounces, but it could lead to stronger type sell-offs. I haven't brought up the advanced decline line for a couple of charts, but for a couple of days. And I want to point out this, that, if you look at the advanced decline line, how it's been kind of channeling sideways as, the New York Stock Exchange has been kind of, just trending sideways there too as well. This actually started breaking down, and we haven't actually had a confirmed breakdown of here. So perhaps this right here is giving us the heads up warning that, hey, even if we bounce, there could still very well be more downside in the New York Stock Exchange. That'll be something interesting to watch. Now, the Pring bottom fisher. People have been asking about the Pring bottom fisher. I want to see when the bottom might come in. Look, it's still heading completely down right now. as it stands, we haven't even started to see it curl up yet at this particular point in time. The pre-bottom fissure, when it gets below this -11 to even deeper readings, I like it when it gets a much deeper reading, like below -30. It seems to be a little bit more accurate, but you can see when it starts curling back up, that is when it starts tagging the bottoms, and you can see it tagged this bottom quite well, and it tagged this bottom from the pandemic quite well too as well, but we're just pretty far off. Another one that I brought up the other day was the NASDAQ record high percent index, and you can see here we are crossing down sub 20. Remember, we need to close down there for the week in order to get that sub 20 reading, and then when we start crossing back above the 35, that's when I feel a little bit more confident knowing that we can potentially be bottoming out, and we can start to see this market rally up a little bit higher. Let's hop into crypto really quickly. Crypto, the Sailor to Shift tool started to point up again. Looks like it's forming a hammer candle for the week. Still quite a bit of weakness on the daily time frames, and we're still well below 0 on the ratio. If we look at the daily time frame, you can see here we broke down, we back tested, and we started flushing, forming a really nice big hammer candle right here, and we're starting to kind of just bounce from this area. But just take a look at the context, right? The context still very, very bearish. It has a lot of work to do. Even if we get back up to the 40,000 range, you have the 20-day moving average sloping down, the 50-day moving average sloping down, the 200-day is rather neutral, and then you have this prior area of support that can act as a level of resistance. Also, if you look at the ratio between Bitcoin and the S&P 500, still remains under that 50-period moving average line. If you take a look at Ethereum also snapped down very, very hard, started to bounce, got rejected right around here. I took a position not too long ago on Ethereum. I think I actually talked about it on the channel, and it went up a little bit. I decided not to sell out of the position, and then it pulled back down. My stop wasn't hit, or the alert wasn't triggered yet. Went back up again to around the 20, I think it was like 2,500. And I was like, okay, it's coming back into that same area. I sold a little bit, and then it reversed down, got alerted about at, I think it was 2,300. And then I got out of the position for a rather small loss. But now it's standing right there, back to where it was. I tried to bottom fish, didn't do too well. So what can we look for? Well, still 2,800 is an area of resistance. You can see it acted as area of support right here. Then it acted as resistance again. And as it stands right now, this level is also acting as a little area of support. If we start taking out this low right at around 2,200, 2,100, or start to get daily closes below this green line here, be careful, because there could still very well be some more downside in Ethereum. If you take a look at the relative strength line between Ethereum and the S&P 500, still well below that 50-period moving average. We like to see this start to turn back up and cross back above it, and have this start to flatten out and turn up too as well. That'd be a significant better situation. All right, everybody, that's all I got for you on today's market brief. Just to kind of conclude and recap, today it really did seem like a risk-off type environment. We're getting some signals that have gave us bigger warnings from the past for more sell-offs to come. So right now, as the IWM is moving into bear market territory and volatility has continued to be expanded, still remains at this particular point in time. Breakout trades are going to, one, you probably will find close to no setups. Intraday trading seems to be the way to kind of handle this, or sitting patiently waiting for volatility to subside to start finding some good setups in this market. Be very careful out there. That's all I got for you. Look forward to tomorrow's weekly recap.